Hey, this is Matt from InvestiQuant. Today is Monday, December 14th, 2020. And before I get started here, just a heads up, on Wednesday, after the market closes at 4:30 p.m. Eastern Time, we're going to be hosting a webinar discussing our new auto trading program that we recently launched. We had quite a bit of interest in this new auto trading program that allows you to trade quantitative strategies in an automated fashion where you don't have to do anything as far as execution. It is all done automatically. So we're going to be talking about that on Wednesday after the close. We'll be sharing some of the great results that we've been seeing with this program with you and show you how you can participate in it if you would like to. So that'll be Wednesday after the close. And if you'd like to join us, sign up at the link below here in this video, which is investiquant.com/webinar. We'd love to see you there. All right, now let's get started with this morning's study. We've got a unique week setting up here. We've got an OPEX week this week. We've got FOMC announcement happening this week. We're getting towards the end of December, which often has some unique seasonality biases. So I figured we'd look at one of the seasonality studies that is available for us today. And the one that I was going to show you today is gapping up above the prior day high on the Monday of options expiration week. So this is one that would potentially happen once a month. Since options expiration happens every month, this Monday would happen every month, and you've got the potential to gap up above the prior day high on that session. So let's go ahead and take a look at what has happened historically when we gap up above the prior day high on options expiration Monday. Let's set this up here looking at all four instruments. The setup's going to be based upon getting long at the open, which is 9:30 a.m. Eastern Time. It's exiting at the close, which is 4:15 p.m. Eastern Time. For the opening filters, we do have a strong overnight session developing here. So I'm going to hit equals next to open above prior day high. And then I'm going to go into the market events section. I'm going to say that it is the week of options expiration day. That is the very bottom option here in the market events section. Then I'm going to go into calendar, and I've marked it's the week of options expiration day. So this is going to categorize all 5 days of the week. And then I'm going to specifically say it's Monday. So we're starting off the week with this gap up above the prior day high during this options expiration week. And then lastly, in indicators, I'm going to put above a 200-day simple moving average. I often use a shorter term one as well, but this is a pretty specific day and opening type, so I don't want to get too specific here because I'd like to keep as many samples as possible. And then I'm going to click View Results. And here we go. So these are the results of going long when you open above the prior session high on OPEX Monday. This has taken place above a 200-day simple moving average. Historically, we've got 39 samples in the S&P, and this is dating back to 2003. We've got 35 in the NASDAQ, 41 in the Dow, 30 in the Russell. And if we take a look at the win rates on these, looks like the S&P has closed above the opening print about 62% of the time on these 39 samples. The NASDAQ 35 samples has closed above the open 69% of the time, so a very strong number there. The Dow, much more neutral at 51% of these have closed above the open, and then the Russell has closed above the open 57% of the time on its 30 samples. So all four of these have closed above the open at least 50% of the time. With NASDAQ being the strongest, being 69% of the time, it has closed above the open. But as a group, it does look like it has skewed a little bit more favorable here on this unique day and opening location. If we take a look at the average win to average loss, looks like the average loss is a little bit bigger than the average win in the S&P. For the NASDAQ, the average loss quite a bit larger than the average win. That's likely due, the difference here that's so large is likely due to a little bit of volatility, higher volatility period happening. You've got a couple outsized losses happening here recently. You can see in this equity curve. that may be skewing that number quite a bit for the average loss. As far as the Dow, it looks like those are pretty similar in size, and then the Russell average loss just a little bit bigger than the average win. But as far as win rates go, it looks like they have skewed a little bit more towards the favorable bullish side here historically. So hopefully you found that helpful. Good luck today. We'll see you next time.